Good afternoon. Today is Wednesday, July 26th. The time right now in Singapore is 7 minutes to noon, and overnight market has been pretty quiet. In fact, the market has been quiet since the start of the week ahead of tonight's FOMC meeting, which is the Federal Open Market Committee meeting, which the Federal Reserve will decide what it wants to do with interest rates. Now, the market has already fully priced in the possibility of a 25 basis point rate hike or a 0.25% rate hike. So the market is not expecting any kind of surprise. However, focus will be on the Fed chairman's Q&A session after his rate hike decision. And basically, the market is looking out for languages that suggest that the rate hikes that we are seeing tonight is possibly the last of maybe the last second rate hike we're going to expect for 2023. However, if the language that he used leaves door opens for the possibility of further rate hikes, for example, if he says something like it's going to be data dependent, for example, that means he's leaving the door open for further rate hikes, despite what he told us last month that there will be only 2 more rate hikes for the balance of this year. So that will definitely cause volatility to spike. And I do expect market will react to the downside as far as equity is concerned. Right now in front of you, there is a 4 hours time frame Dow Jones Industrial Cash Index. You can see the market actually traded to a high last night at 35,527.6. Now this is a bracket of prices that is very vulnerable to profit taking. In my opinion, the level is 35,233 to 35,824.5. Okay, so basically do watch out for this kind of corrective movements in the aftermath of the rate hike decision. Now if we reference the futures contract, now this is the micro e-mini futures contract traded on CME. You can see the high traded is 35,694, and again this is very similar to what we see in the cash market. So long as the market is trading within 35,165 to 35,754, I think it is actually quite vulnerable to the downside. And if the market do take out 36,000, which is this horizontal red line here, 35,581, then the market is getting ready to come off in a big way, perhaps to test the 33,800 levels as an immediate target. So this is going to be quite a substantial decline if the market do believe that the Federal Reserve is going to leave himself some more wiggle room to hike rates instead of telling us that it is going to be the second last rate hike for the year. Okay, over in the S&P 500 in the cash market, we can see that the market did not quite manage to register a new high for the year. This week high is nowhere near last week high at 4,578.43 in the cash index. Now this level is also very vulnerable to the downside. The level is 4,548 to 4,637 and 0.3. So if that is going to be any kind of profit taking, we do expect I do expect the market to come back down to test the 4,400 levels. Now in the micro e-mini S&P 500, which is what we are seeing here, the high traded is 4,609.5. Again, very similar to the cash index, anywhere between 4,542.5 to 4,631 even. That level will be very vulnerable to profit taking. And if the market do take up 4,557 and close below that, I think the stage is set for the market to correct, perhaps lower to test the 4,411 levels with an alternate target at 4,368.5. So by and large, these two targets is very, very achievable. So let's see what happened. Over in the Nasdaq cash index, we can see this is a Nasdaq 100. The market did not quite manage to challenge the high that we saw last week at 15,932.05, and the market has been coming down despite last night rebound a little bit. And if the market do close below last night's low at 15,674.66, I think the market is getting ready to challenge the immediate bottom here, somewhere between 14,925 to 14,687.6. Now, if you reference the micro e-mini Nasdaq 100, that means if the market do close below 15,484.5, I think it's getting ready to challenge the 15,063.5, perhaps going to as low as 14,853.5. So between these two levels, I think the market should be able to find some temporary bottom, and it all depends on how aggressive is this going to be. And if the market slides below 14,248, for example, then all is over. Basically, the market has already chopped and we are looking to the downside in a very big way. So do watch out for any kind of volatility, especially on the downside. Now in Asia itself, we can see the Hang Seng Index has actually rebounded a little bit since yesterday. The market is now stuck just under the 19,450 levels. And if we reference the futures contract traded in Hong Kong, we can see that the market is again very similar to what we are seeing in the cash index. And I do have two levels to sell. I think the market is basically in a bear market, and we are still looking for higher to sell situation. And if the market struggle at 19,850 to 20,155, I think that will be a level to sell. And if the market do actually manage to go even higher, the next level for me will be 10,550 to 21,085. So downside, I think my immediate target is at 18,000 to 18,430 thereabout. So downside, I think in this market is basically trading within a bracket of prices. So do watch out for this sideways market to continue for a while. And over in the Shanghai Composite Index, of course, we don't have the equivalent in the futures. So I'm just going to show you the cash index. Now, let me see the 4 hours time frame first to give you more details of the price movement. You can see that the market has been going sideways, more or less, very much in line with what we are seeing in the Hang Seng. And this market is definitely trading to the downside with a little bit bias to the sideways market. So in the meantime, the market is struggling. There will be a challenge. If the market can only take up 3,250, then the market have potential to go up and challenge the 3,285 or 80 levels. And that's about all I think you can do before it comes back down again. Over in the Nikkei, you can see that Nikkei is basically trading sideways as well. We have seen this market doing like this for quite some time now. In fact, for more than a week, the market has been trading below 33,000. So we just want to see the market have the ability to challenge higher. Technically, it does look like it has a case for higher prices, because this could be a three-wave potential corrective rally here, targeting 33,340 to 33,640 levels. So do watch out for this. But if the market has more strength, this is the ultimate levels to sell with 33,760 to 33,950 levels. Okay. Now let's take a look at the dollar itself. Now the dollar index, I'm referencing here the ICE dollar index futures here. We can see the dollar index has basically bottomed out at 99.22, and it has rebounded very strongly to 101.40 overnight, and it's looking a little bit tired right now. I do believe the market may pull back a little bit. Then if we do see a pullback to somewhere around 100.05 to 101.30, then that could be a level to actually position some speculative long position, with the idea that the market may do a larger degree three-wave to challenge a 102.20 overhead. So this could be a scenario that may pan out. Let's see what happens over here. And in the euro dollar, we can see that the euro dollar has actually come off quite a fair bit. Overnight, we have a low at 110.20 levels, and this one is also laying the groundwork for a potential rebound back to 111.20 to 111.50 levels. I would love to see a rebound here, because this is where I think it would be good to sell for another dip towards a 105. 109.55 to as low as 108.80. Okay, this could be a three-wave decline, very much a mirror image of the dollar index. Now, sterling is also very similar to the euro dollar, as the market stabilized at 128 there around, and then we can see the market is rebounding overnight. And if this rebound can extend a little bit higher to 129.70 to 130.10, that will be a great level to position short for the next leg down to challenge the 126 level, which is this low here that we saw on June 29. Now in the Aussie itself, now the Aussie is also rebounding a little bit, although it did come off quite sharply this morning to 0.6730 there about. I think the market could be doing a very short-term rebound back to 0.6510 to 0.6828. I think that will be a 0.6810 to 0.6830. I think that would be a great level for the market to position for the next leg down. The target is at 0.66. So this has been the market movements basically sideways, but very, very wide range. Okay, over in dollar yen, I think this is where I get excited. And dollar yen has rebounded back to almost 142 from a low of 137.25. And this market is getting a little bit toppish in my opinion. And this will be an area to sell at 141.15. Sorry, 141.15 to 142.10 levels. With the idea the market will go below 137.25. The level cannot. So I would not say cannot. I have a target here at somewhere around 134.10 to as low as 132.30. So this is a large degree pullback in the dollar versus the yen. And let's see what else. Okay, crude oil. Crude oil has managed to go almost to $80 per barrel, and right now the market is looking a little bit toppish, and it's definitely not a level to buy, in my opinion. If anything, I think there will be a counter trend trade that may actually develop very, very soon. If the market breaks and close below $78.29 in the futures contract traded in NYMEX, for example, then you can see that the market may actually go down to as low as $73.85 thereabout. So this could be getting out to be a corrective pullback. Overall, the market is quite bullish, but I won't be buying anywhere near the current levels. I would love to buy somewhere near the sub $74 per barrel thereabout. Okay. And over in precious metals, we can look at the spot gold itself. Spot gold is getting ready to rebound, and we can see the low traded recently is at $1,951.90. And if we can see a little bit more rebound to 1,969.7 to $1,973.85 thereabout, I think that could be building up for a case for a three-wave decline towards 1,945.50 thereabout. So this could be laying the groundwork for a pullback here. Okay. Over in silver, we are seeing similar structure here. We see a market rebound from $24.26. Market is getting very close to my ideal retracement point to $24.77 to $24.88. This level will be a much better level to sell for a corrective three-wave decline targeting $24.10. Now, over in Bitcoin, nothing much has really happened. The market has dipped below 29,000 briefly, and now the market is back above 29,300. I think from here onwards, the market is getting very interesting, in my opinion. At the most, we can see more and more dip below the most recent low at $28,977, perhaps to as low as 28,300 to 28,740 levels. I think that would be a great level to pick up long position, although the market has actually pulled back a lot deeper than I thought it would, because previously I was only looking for a marginal dip below the 29,600 levels, but now the market is already below sub 29,000. So let's see. Okay, but by and large, I am still very keen to look for a long position, ideally between the 28,300 to 28,750 levels. So this is my opinion. I think the max move up in crypto, especially in Bitcoin, is likely to see a quite explosive move beyond 31,900. There you have it. Tonight's the night. Now the FOMC is at 2 a.m. Singapore time. So if you're going to be awake, watch this number and watch the speech given by the Fed Chairman Powell. Bye-bye. Take care.